All right, so welcome to another video. In today's episode, we're going to take a look at creating an iron condor on Tesla, and I'll give you some insight on how I might do it and approach it. All right, so let's get started. And if you're brand new to trading iron condors, highly encourage you to check out the tradersfly.com website. There's a lot there to learn and tons of knowledge on iron condors as well. All right, let's kick things off. We're going to build out an iron condor on Tesla. So first thing behind iron condors is that iron condors, they make you money from when a stock moves sideways. So if we look at the price of Tesla, what's happening is most people, they want to catch this upside run, but there's a lot of times if we really look at it, where the stock is moving sideways, or between here, stock's kind of moving sideways. So you could create iron condors even when the stock is moving up, but take a look. Look at all this times the stock's moving sideways here, kind of sideways here, kind of sideways here. So yes, there are some upside moves, but there are also quite a lot of sideways moves and action in the stock market. So what we're trying to do when we do an iron condor or sell an iron condor, we will sell some stuff under the price and above the price. And when you're looking at an iron condor, you're really setting up two vertical spreads. So you're selling a vertical spread on the put side and the call side. So let's take a look at Tesla over here, and we've got a 15-day option. We could go to the 22 as well. So really just a matter of how much range you'd like, and just along with short vega or volatility that you want to have. But when we look at Tesla, we could sell. Let's do the call side first. Most people understand that, okay, if we go to the call side, I can go to about a 15 delta here, sell the 315 and buy the 320. So I'm selling this vertical spread right here. Now, if I analyze this trade, what it's going to do is it's going to put up some risk, $452 of risk, to try and make 48 bucks. If you don't like that, you could bring it in a little bit and say, okay, I'll do the 310 and 315, and now you're trying to make 62 bucks. And remember, if the stock stands still, okay, you make money. If it goes down, you make money. If it goes up slowly, you make money. And you're making about $2.17 per day from theta decay or time decay. I'm going to switch to 5 contracts here on this one. So it'll be a little bit stronger, but here in this case, what we're doing is we're actually selling the calls. So remember, when you're selling the calls, you are actually creating a bearish position, and that's what we're doing. So if the price goes down right here, if it goes down, here's our price, it goes down, we are doing okay. So that's our bearish position. So we'll go ahead and push that order right there. Next, we will hop on over to the put side. You might be wondering, why am I not doing this as a together trade or a full iron condor at once? Well, because we're teaching it and we're trying to break it down. Otherwise, normally you put it in as a full single position. So we can do the same thing on the put side. We can go to the, let's say about 240, sell that one. Okay, and then we will buy the 235. And if we analyze that position, we go to 5 contracts, and then we take a look at it. Remember, now if you are selling the put, you are creating a bullish position. So with the puts, that's a bullish position because now you're a seller of the puts. So keep that in mind. So now what we've got is, again, a theta decay of 12. And if the stock goes up, we make money. Now, when we combine it together, we get ourselves an iron condor where we're making about $23 per day in time value, risking about $1,880, almost $2,000 to try and make 620. Now, you probably will get out of it before then, so you might actually only make 400 bucks. But if you look at the potential $400 on about 1880, okay, you might make about 20%. Now, sometimes you might make only 10%, so 1880 times, let's say 10%, make 188 bucks. Yeah, it's possible. But with theta, as it decays, look, goes up right here. If the stock stands still, you make about 300 bucks. But then if it moves against you, yeah, 180 bucks. Not bad, right? Still not bad. Okay, and then we'll send this order in. We'll let that fill, and there we go. We've got ourselves an iron condor. So there, now we've got ourselves an iron condor. And of course, if you wanted to put that position in all at once, you could sell this, buy that, and sell this, buy that, and now you've got yourself a full iron condor built. This way is actually a better way to get into your iron condor, because what happens is you're able to put the order in all at once. I'm going to send that order in as well. Okay, so now that we've got ourselves an iron condor built, I've got 5 contracts, maybe pushing for a 6th. There we go, we got 6 contracts. How would I maybe tweak this position based on Tesla? Well, I know Tesla likes to whip around, and it's kind of pushing to the upside. So if you wanted to, as a little modification, you could sell an extra vertical spread on the put side to be slightly bullish. So I sell this one, buy that one, and I could do 2 of them because I've got a handful of contracts, or even a few more. So now I'd be slightly bullish simply because I've got a little extra delta and some short vega. So there we go. Push that order in a little more, and there we go. Now I've got a slightly bullish iron condor on Tesla. So there you go. That's how you might construct an iron condor on Tesla, and how you might do it. Because with stocks, you may want to be slightly directional with some iron condors. It's not like an ETF. So it could whip on you, and that might be a little bit of a tweak or modification that you might do. So hope that helps. Truly appreciate you sticking with me, joining me, and learning a ton. Feel free to check out our website, tradersfly.com. Stay awesome and continue to learn, because you get a lot of great goodies in there. And I will see you next time. Take care.